Well, I have not wavered in my forecast for inflation. I haven't wavered in the fact that I thought prices of homes nationwide was going to go up, but the great markets of Florida, Texas, and Arizona were going to do really, really well. And of course, here in Phoenix, we're right next door to California. People are leaving California in droves. And the first stop to Florida, Texas, and Arizona is Arizona. We're 6 hours away from Los Angeles, from the beach, and people are stopping here, and we don't have enough housing for them. Prices of homes are going up, prices of rents are going up, and we have an inflationary bulge right now. Is this something that's going to stay with us? I don't know. Is it going to be transitory? I don't know, but I've been talking about this for years. And let's go to my very first slide. Now, we've been talking about this. This should not come as a surprise. We've been talking about the fact that me as a baby boomer, a lot of my clients are baby boomer, we need to make sure that we protect our purchasing power. And we have one of those experiences right now as to why you want to have that. Because prices of gasoline are going up, prices of food are going up. Have you been to Costco and just looked at what meat's going to cost you? Have you had anyone come over to work on your house? I've got people coming over to my pool, and I'm just shocked at the prices that are coming out of the pool. Concrete's up, lumber's up, labor is really, really up. So if you're in labor right now, you can really do really, really well. It's a great for you. It's a life changer for a lot of you. But that's inflation for me as a baby boomer. Now, if you follow my work, we've been talking about the fact that inflation has been with us since 2000, easy. Been very, very benign. It's been less than 2%. And in that 20 years, our purchasing power has diminished by almost 50%. And look at this. This is no longer benign inflation. This is really, really bad inflation. We're getting a lot of it, over 5%. And of course, now that some areas are a lot more than 5%. This is kind of like a base, and you can see it's higher than virtually everywhere, even going back to 2007 and 2001. This is probably the greatest inflation spike we've had in a very long time, and there is no abating. It doesn't look like this is quote unquote transitory. And inflation is the worst thing that can happen when you're a baby boomer, unless you protect yourself. And there's lots of strategies. Real estate, my business, happens to be one of the greatest inflation hedges you can have. And we do very, very well in an inflationary environment. So let's go to my next slide. Now, this comes from Zero Hedge. You can see that even in benign inflation, we've had prices go up. And of course, there's been demand. This is going on to my my timing model. You can talk about that, and you can see it. Now, if you follow my work, I have been steadfast in saying that prices are going up, and they would go considerably higher. And in 2020, when we were in the depth of recession, President Trump got together with the Federal Reserve and the Treasury. They put $6.3 trillion in stimulus out, and the stock market went wild because it's a liquid marketplace. Now, I said it's going to take 9, 18 months for that money to come through the economy and get to Main Street, which is where real estate's at. We are on Main Street, and look at this. So here, right here, when we started getting into the middle of 2021, you can start seeing this spike, and this is the stimulus coming through, and look what it did to prices. Now, you remember when I talk about my timing model, I often say I know what is going to happen. I don't necessarily know why. And here's a really good why. We had stimulus come through and just push prices right up, right along to the timing model. It was just perfectly placed. I continue to believe that that's going to happen. I have not wavered. I know there's a lot of pundits have been on the news where the housing market's going to crash. We're going to have inflation. They keep waffling back and forth. This is going to fall down. I've never said that. I said that housing across the country is going to go up. I believe it's still going to go up. It's still continuing on an upward trajectory. We're talking about some more stimulus. Oh my gosh. That would maybe get us into that explosive phase. Maybe we're going to get some really, really strong stimulus that's just going to really pop these things. Let me go to my very next slide, we'll talk about that. Keep in mind, you're always welcome to make comments. That's why we put this up there. I love to get comments. It's often other people have the same comments as you. They just don't want to put up there. So you're helping everybody when you do that. So let me go to the next slide. This is taking a smaller snapshot from the Federal Reserve electronic data. And this is from Q1 2020 to Q1 2021. And here we have this shaded section is the recession. Now here in Phoenix, so I use Phoenix because we're headquartered here in Phoenix. This is our home market. In Q1, the base price was $310 in Phoenix. By the time we got to Q1, it was up 39 points to $349. That was a pretty nice return. That's like 10 or 15% return on that. But if you remember, we talked about here when we start getting to the second quarter, this is where stimulus coming in. And we're talking the fact that it was going to take 18 months for the stimulus to come through. And look at this, 9 months later, look at this little spike. All of a sudden we get an acceleration in home prices. And that goes right along with this liquidity flow that's coming through the economy. Just like we said, just like it was forecast, like we knew what we were doing. Amazing. Who would have thought that we could do that? So let me go to my next slide. Now, this is where fortunes are made because real estate is made for an inflationary environment. 30-year fixed rate mortgages are made for an inflationary environment because a fixed rate is exactly that. You fix your cost and inflation brings it up. So during inflation, the price of your property goes up and the price and the rent goes up right along with it. But your expenses, which is the major expense for most people, is your principal and interest, that stays fixed. And the beauty of it is that when we're leveraging, if you put 20% down, it means you use 80% of someone else's money. But the appreciation is on the entire package. So if the property goes up in value, it really affects your down payment. So let me just look at this and you can understand this really, really wonderfully. So now if you, in 2020, put 20% down on a $310,000 property, it would have been $62,000. Now we had a big gain. We talked about it being $349 at the end of 2021. So 1 year, 12 months, went up $39,000, but you only put $62,000 in. And for 1 year, that $62,000 gained 62.9% in 1 year. 1 year, you gained 62.9%. Where do you go to get that? I mean, literally, where do you possibly go to get that? That's amazing. And that's if you put 20% down. A lot of people don't put 20% down. My investors put 25, 30% down. But where does the average person do? You as a baby boomer, where do you go to get? How about your grandkids? How about your kids? How about you as a tenant? Maybe you're one of my tenants watching this. Let me just show you the next screen. This is pretty doggone remarkable. Now, remember when I showed that increase? That was like just starting to get, and that was like July and August. So 1 year, if you use that parameter, from July 1st to June 30th, that's 1 year. But that would have been a much bigger year. So this is from July of 2020 to end of June 2021. So 1 year, when that stimulus is coming through, we're up 33% in 1 year. 33% in one 12-month period. Can you imagine that? And it's still going on. The stimulus is still coming through. That's just where our data ends. We just don't go back that far enough. So had you put 20% down, you would have had in that 12-month period 165% gain in 12 months. 165% down. But here's the magic thing is, most of the starters, they leverage. They've going to put 5% down, or they're an FHA buyer with 3.8%. And if you'd have put 5% down and had this type of gain, this would have set you up for life. This would have put you on the path to success because you would have had a 660% gain. Had you put 5% down on a $330,000 house, you would have had a 660% gain. That $15,000 would have been well over $120,000, $130,000 in one stinking year. How about that? How about that? Amazing. This is how money's made. This is how money made. This is how you make fortunes. We're in that time of frame where you can literally make a fortune, whether you're leveraging, even if you're paying cash. Your assets are being affected by environment, and we have no abatement. Lumber is in short supply, copper, concrete, labor is really in short supply, and we have a government that's locking things down. So if people are locked in their homes, that means they're not mining. It means that they're not making refrigerators, not making air conditioners. That means that we can't produce other things, which there becomes a scarcity, and that scarcity changes the pricing. And if you already own a property, the property's going to go up. Then put some demand factors on when you're in these markets of Florida, Texas, or Arizona, where people are moving because they want to be free and they want to have a better life and they want to get out of this lockdown, so they want to go do some business, they want to see the sunshine, they want to go outside, and there's not enough houses for them. You can go to the next slide. Now, we talked about the fact that the government put out $6.3 trillion during a recession. You know, so that's what that's one of the mandates that happens when you have a government putting out money, is when there isn't any money being put out. So that kind of picked up a lot of slack, and a lot of that money got used because a lot of people weren't working; they were paying bills with that. But now the economy is moving along pretty nicely. What happens if we put another $5 trillion? What if we put $3 trillion? What if we put $10 trillion? What would happen to inflation? What would happen to that stimulus coming through the marketplace? What in the world would happen? You already have a marketplace that's doing pretty doggone well, and we're going to add liquidity to it. What happens when you throw gasoline on a fire? Well, I think prices are going to go considerably higher. And if you don't have a hedge for yourself, if you don't own some rental property, if you're a renter, you need to go buy a house. If you have to band together and buy one with your brother, or your sister, or your best friend, go buy one. And whatever it takes, you got to get off the rental and get onto ownership. And if you're a baby boomer, you need to do that for yourself, because you're going to get priced out of the market. You can see where inflation comes along. If you think that meat is expensive now or bread's expensive now, wait till you see some stimulus coming through. Maybe the prices double. Can you imagine paying like $12 for a loaf of bread? I can't. Can you make? It's already over $5. It's close to $5 a gallon in California. What if it goes to 10 or 12? You don't think that's possible? I certainly do. Let me go to my next slide. Now, we've talked about my timing model. Oftentimes I don't know what is going to happen, or I know what is going to happen, I don't know why. So I've been explained why. But my timing model is saying things are going to go even crazier than now. The model says things are going to go much, much higher. So what does that mean for you? I think we could go a lot higher from here. Now, here in Phoenix, Arizona, we've had homes that went from $350,000 3 or 4 years ago. Now they're being bought for $700,000. It's cheap compared to Orange County, California, a mere 6 hours to the west. So could our home prices here in Phoenix go same as Orange County, where that $350,000 home goes to $1 million? Well, can in Orange County, why can't it go here? So I don't necessarily know why. It's just that here's what my timing model is saying, what is going to happen. My timing model is saying things are going much, much higher. Much, much higher. And if you don't have at least 2 properties, just get 2 properties. If you're a baby boom, go buy 2 properties. You're welcome to talk to us. We're really, really good at this. We're in the real estate business. You're welcome to call us. You're welcome to talk to our staff. You're welcome to we're more than happy to talk to your financial advisor, your spouse. We'll explain anything we can. We'll go over our statistics. We'll go over our thoughts and see how this works out for you. Now, as I said, I'm in the real estate business. West USA is a $5.4 billion firm here in Arizona. They do our back office work. They do our paperwork for us. We're really, really good at what we do. We're happy to do our paperwork for you. We'll help you find a property. We have tons and tons of management people that take care of all our properties. We're not the landlords. And they'll send you a check each and every month. This is a very, very good thing for your soul. Let me just finish up. Now, if you like my videos, give me a thumbs up. I do this to try and educate it. I get a big kick out of it. If you like it and subscribe, it really, really helps with our marketing. These are a couple of books that I've written. They're great for giving you some motivation, maybe give you some ideas as to buying some more properties. We're here in Phoenix. We're more than happy to help you. If you want to buy in Phoenix, we'd love to see you there. But we also have contacts all across the country. Florida, Arizona, and Texas are going to be great. But we're right here just east of Los Angeles, and maybe 5 or 6 hours you can be on the beach. And there's just droves and droves of people coming here. Our market is absolutely phenomenal. If I can help in any way, you can reach me at michael@michaeldouville.com. My very best to you.